Sam Tabar, welcome back to the Mining Pod Bitcoin Stock Show, man. Appreciate you coming back on to talk to us.
Thank you for having me.
So, big news this week. Bit Digital launched WhiteFiber, which is not a spinoff of its HPC and AI business line, but to basically what would you call it, a subsidiary of the business, kind of signaling to people that this is the HPC and AI focused and front-facing part of the business. Can you give a brief explanation of what led to this decision and what exactly WhiteFiber is for our listeners who might be behind on this news?
Yeah, and just to clarify, we didn't spin out WhiteFiber yet. We're still strongly considering it, but we did rebrand our HPC business. We still exist as a single public entity in Bit Digital, but the WhiteFiber brand is something that we've been working on for quite a while. WhiteFiber includes our entire HPC business, which means both the cloud business and the data center business, which we acquired late last year through a team called Enovum. WhiteFiber is a vertically integrated infrastructure platform. There are a lot of synergies between the data center colocation business and the GPU cloud services business. And we're offering customers a comprehensive platform, if you will, designed to handle the most intensive AI workloads. It was really important for us to establish the WhiteFiber brand. It's a signal that this is a real business. We're not just a Bitcoin miner poking around in HPC as a hobby or to get the shares up. We're really doing this. And rebranding it as its own entity is a very important first step for us in signaling that this is a formidable enterprise and it's working towards building standalone brand equity. It's also important to note in the press release that WhiteFiber now has 20 customers across the data center colocation and cloud services business. Just last year, around this time, we had only one customer, so we've grown quite a bit. And we also mentioned that our target revenue run rate by the end of last year would be 100 million. I could say that today we are a whisker away from 100 million from a contractual basis. So the contracts, each contract has its own starting date throughout the rest of this year. If you were to count those, we are very close to being at 100 million. But look, we think the rebrand will help with business development. It helps legitimize the business. It certainly sends a signal that we're in it for the long haul. We see a super bright future in HPC. We want to establish ourselves in the industry as a leader by providing one of the most performant and high trust platforms. And we continue to believe that this business can and should stand on its own at some point.
I'm glad that you mentioned business development. That'll lead well into my next question, but just a few things I wanted to recap from that. When we talked last time, you had not purchased, or Bit Digital had not purchased Enovum yet. You had teased it a little bit on the show. It's really interesting. It came out just a few months later. And I'm surprised that we're not seeing more Bitcoin miners do something similar to the WhiteFiber rebrand, because it really does give this kind of stamp of approval or legitimacy to these business lines and give some of these customers a more traditional data center facing business to interact with. On that note, with regards to business development, selling general purpose compute, cloud compute, AI, HPC, whatever you want to call it, obviously a much different business line than Bitcoin mining. Bitcoin mining, you liquidate directly to a pool or to the Bitcoin network. How did Bit Digital go about building out that expertise? Is the Enovum team a large part of that? How are y'all approaching business development for these data centers?
Yeah, the AI infrastructure industry is experiencing hyperbolic growth with demand surging for both GPU cloud services and colocation capacity in tier 3 data centers. For most of 2024, we were running a sales process with our existing personnel. Basically the same team that was used to run a mining business. So we were wearing like a lot of hats, and frankly, that was not sustainable. And we were just not able to handle the volume of sales leads. We lost a lot of deals because of cognitive overload, frankly. So one goal of our hiring efforts this past year was to bring our sales and business development process to a super high institutional enterprise grade. We knew that we needed to bring on external talent to succeed in this business. We needed the right experience and expertise. So we hired a head of revenue and additional sales and BD team members, in addition to a CTO and an engineering team as well. And look, these guys are very, very experienced hires from an existing neocloud company. They brought in immense domain knowledge and expertise and industry relationships, and they really changed the dynamic for our company night and day. In the past, we were mammoth hunting. In other words, we were focused on super large customers because we didn't have the bandwidth or the infrastructure to service smaller customers. But now we can. Now, as part of the strategy to onboard customers that are smaller with smaller starting quantities, with the intention of over time, and that's excellent. Like I said, we had one giant customer last year. Now we have 20. So also with the acquisition of Enovum on the data center side, so I was just talking about the cloud side. On the data center side, that was additional talent, and they also had business development expertise. Bit Digital retained key Enovum employees as part of that acquisition that we made. The key employees possess decades of collective experience in managing and developing tier 3 data centers. So they filled for us a key gap in our capabilities. We were Bitcoin miners, not tier 3 data center. It was a completely different skill set. And so we were able to avoid all the grief and the mistakes by getting a plug and play team that knew what they were doing. So Enovum, had this existing customer base. They had a strong customer pipeline, and they had a fully developed BD platform. So we were covered on the cloud side and covered on the colocation side. And these two businesses, frankly, are very complementary and synergistic. There's a lot of cross pollination on the sales side and the ability to do cross-sell services, which is great. The biggest change of going from a Bitcoin miner to HPC is the customer service aspect. You got to remember, Bitcoin miners have no customers, whereas HPC is customer facing. It's a customer first business, and I do think that Bitcoin miners have very atrophied muscles when it comes to customer acquisition because, like I said, Bitcoin miners have 0 customers. All they do is plug a machine, get the Bitcoin, mine the Bitcoin, and put it on their balance sheet. There's no customer acquisition in that process. So it's a very different skill set to not only have tier 3 data centers, but it's a very different skill set to have customers and customer acquisition. It's a process, it's a skill set, it's an expertise. I don't believe Bitcoin miners have that in-house. So it has to be done through very specific acquisition of talent and operations.
It's worth mentioning and highlighting that because most of the business development for Bitcoin mining companies is traditionally self-serving, if you know what I mean. Right. You're hunting for sites, you're hunting for better deals on ASICs, things like that. Yeah. You're not actually trying to sell your end product to anyone except for a pool or directly to the network.
Exactly. And another reason why we did a rebrand of WhiteFiber is now our HPC customers have the WhiteFiber website to go to. They see exactly all the services. They see all the expertise that we have, and it's very much standalone. And so it helps with business development to have its own website, its own team, its own brand. Just going back to the earlier question as to why we rebranded the entire HPC division of our company.
So I want to put a pin on something that you said just then about your 20 different customers versus mammoth hunting. I have a kind of 2 questions of that, but I want to kind of set some groundwork for some people who are a little bit confused on this question. Can you clarify colocation versus GPU as a service? And a follow-up to that, I believe based on the January update that y'all did, it's about 1/10 of your revenue is currently coming from colocation. The rest is coming from GPU as a service that is furnished from Bit Digital's own GPUs they're renting out. So 2-part question, can you clarify colocation versus GPU as a service? And also give us an idea with WhiteFiber, what is Bit Digital thinking in terms of business development for what distribution do y'all want going into the future in terms of how much will be allocated towards colo, how much GPU as a service?
Yeah, so colocation demand is mostly geared towards the development of AI models. So training, inference, fine-tuning are the main things that our clients are utilizing compute and rack space for. So for example, anytime you ask ChatGPT or any other AI model a question, that is powered by a GPU sitting in a data center somewhere. So of course, we have some non-AI demand. Enivum has a small portion of clients doing visual effects and other non-AI applications, but the majority is AI applications. On the GPU side, we have a client called Boosteroid that is using GPUs for its cloud gaming platform. So that's a slight difference. And in terms of your question as to how much business will we have on cloud versus colocation, I mean, currently colocation is like 1/10 HPC revenue. I would certainly expect a convergence, but it's really hard to say when that will happen. Colocation revenue will rise from that 1/10 figure, absolutely, just based on our new sites that will start earning revenue in the second half of this year and beyond. Of course, we have new GPU contracts that are going to begin this year. So it's really it's really difficult to forecast the exact proportion between both businesses for a given point in time. But longer term, I envision them being pretty equal. But it really depends on the broader market trends. The market is evolving by the day, frankly. So trying to predict what the world will look like in 3 or 4 or 5 years is tough. But we do know one thing, that the world needs more compute and more rack space by then.
I'm glad that you mentioned the second phase of the Innovum facility. That's where I want to turn our attention now, and then we'll return to WhiteFiber for that spinoff teaser that we talked about. But for the timeline for or I should say maybe the next 2 phases of Innovum, a Q3 investor presentation that Bit Digital had kind of put a 12 megawatt milestone for Q2 2025 and a 32 megawatt milestone for Q4 2025. Is that still accurate, or is that in the ballpark? Can you give us any updates on that timeline?
It's in the ballpark. It's funny you ask that. We're working 18-hour days on this. There are a lot of moving pieces when it comes to data center development, and there are a lot of variables. So if one thing doesn't work, there has a cascade effect on, if there's a delay on one thing, it kind of creates a shift in the timeline. But by and large, I think we're on track. I hesitate to say that because last year I said, well, our target is $100 million in revenue, and we're now there by a whisker on a contractual basis, and it's now almost mid-February, so I was off a little bit. So I don't want to say anything that will end up being weaponized, but we're doing our best, put it that way. We're busting our ass.
Yeah, I can appreciate wanting to be a little measured with what you're saying, because as I said on a pod the other day, it's like Bitcoin miners are always promising the moon and then they deliver the stratosphere. So a lot of these things are more complicated than I think investors really appreciate, especially with regards to like supply chain snags and things like that. Like you said, one missing piece could just derail months of progress.
Yes.
What does financing look like for this? Because traditional data centers are several orders of magnitude more expensive to build out. Anywhere, depending on who you ask, $5 to $10 million per megawatt or more. What can we expect from Bit Digital in terms of financing this? Y'all have a lot of cash and cash equivalents in Bitcoin or cryptocurrencies on the balance sheet, 94.3 million as of January in cash and cash equivalents, 91.3 million in crypto. That could get you part of the way there. But should we expect any other vehicles like converts or anything like that, ATMs? What's the financing piece for this look like?
Yeah, I mean, so yeah, like I said earlier, our plan is to have a total of 32 megawatts. We're going to more than double that in 2026. That, of course, does require substantial capital, and we're constantly looking at potential site-level mortgaging financing, because when it comes to financing data centers, it's much easier than financing Bitcoin mining operations. Model out the future cash flow, so you can get a much cheaper cost of capital. That's why we have zero debt as a Bitcoin miner. We never took on debt to finance Bitcoin operations, because that, we think, will end in tears. We can never really match future liabilities on your debt payments when it comes to Bitcoin mining, because you just don't know where the price of Bitcoin is going to be. That's a very different situation. With HPC, you know exactly by the penny how much money you're going to make every month, given that you have these long-term contracts. You mentioned converts. Converts are not something we have really considered, mainly because it would basically preclude a separation of the business in the future, because there is a very strong consideration of us separating WhiteFiber from Bit Digital, so converts are not an option for us right now. Mortgage financing is definitely the preferred method for financing the data center build out. Private credit is also an option, but it's less capital efficient. It's a little bit pricier. In fact, we did have a household name that offered us a very large amount of massive amount of money, eye-popping amount, to develop our proprietary data center pipeline, but we at the very last minute decided not to take it, and because we thought we can get better terms. But look, for larger projects, we could also think about bringing on a capital partner in some shape or form, and that is a strong possibility in the future. And straight equity is actually not our preferred method for financing our data centers, but having access to the equity markets as a backstop is also useful as a last resort.
I'm glad you mentioned the capital markets piece there about being an HPC play and an HPC business. I'd assume that it would be easier to access capital than it would be for Bitcoin miners. So that makes a lot of sense to me. I have to ask, with regards to the financing thing, one last question, and then I want to move on to the second phase in terms of what we might expect from clients for that compute. Why is there any consideration to sell Bit Digital's Ethereum stack? I mean, we've seen last quarter the Q3 results, the Ethereum staking netted about like 1.1 million revenue. It just seems peanuts compared to what Bit Digital is earning from other business lines.
Yeah. Look, the basic premise of I get a lot of heat for this. The basic premise for our ETH staking model has always been that staking provides yields that can be redeployed to grow other business lines. So staking ETH is somewhat of a no-brainer for us. We still think that ETH will have its moments. We remain bullish on ETH in the long term, and also a lot of smart people as well. But I'm very aware of the audience I'm speaking with, and I'm not an ETH maximalist. I'm a shareholder maximalist. I'm not a Bitcoin maximalist. I'm a shareholder maximalist, and I have to navigate and transcend the noise in order to be patient on certain things. We do believe that the market will soon appreciate ETH's versatility and sound monetary policy. We continue to hold 27,000 ETH. We stake a very large portion of it. But at the end of the day, we will sell digital assets to fund growth initiatives. But if the alternative is selling and holding cash versus Bitcoin or ETH, we'd much rather prefer to hold Bitcoin and ETH and use cash. Cash is the ultimate shitcoin in many ways. So,
understood.
So look, we're really happy about the institutional inflows that the spot ETH ETFs have brought and will bring into ETH. We think that'll be helpful in the long term. But look, there's one thing that's really important about the staking question you're asking me, is that we're the only capital markets proxy that exists, as far as I know, where we have the ability to stake. So if you buy BTBT, you get it. You're getting that staking exposure. ETH ETFs don't have the legal ability to stake. We do. So we have an advantage over those vehicles. But I also think Bitcoin's a very crowded market when it comes to proxies. You have ETFs, you have MicroStrategy, you have miners. There aren't many ETH ETFs whatsoever. There aren't any ETH proxies compared to Bitcoin capital markets proxies. So we thought we could fill a spot right now. But I do think the market is confused, and rightly so, because what are we? Are we an HPC play? Are we an ETH proxy? Are we a Bitcoin mining fleet? We love the fact that we have optionality and we have different levers. We think that's a great thing, but that story is probably too complicated for the markets to understand. That it's wonderful from a capital allocation perspective to have different levers. If you're just a pure play Bitcoin miner, you have just one lever and you have to hope and dream that Bitcoin goes up. We don't have that issue. I could sleep at night knowing that when I wake up, I'm going to have certainty of revenues on one of my underlying businesses. But maybe the capital markets don't appreciate that. And maybe we need to split the companies where one is purely digital assets and the other one is purely HPC. And maybe we're taking steps towards that by creating WhiteFiber.
Okay, perfect lead into a question I want to ask. But I'm going to bookmark that, ask it next. And the last one I want to ask on the expansion is, you mentioned going mammoth hunting before. That didn't really pan out the way y'all wanted to. You got 20 clients currently for your current.
Oh, the mammoth hunting did work out very well with that one first big client.
Right. But so for the expansion, you kind of mentioned something about maybe returning back to like a larger client for that one segment of the expansion. Is that what we should expect from the data center expansion in Innovum? Will that be multiple clients? Will there be one large client at that data center or at that section of the data center?
Well, last year we were heavily criticized for having too much concentration risk on one client. And so in order to address that criticism, we now have 20 clients. So it's really good to continue that diversification of clients so that we're not beholden by any one client. Despite the fact that most of these clients are all like multi-year contracts, it's just good to have a diversification. But yeah, we will go back to mammoth hunting now. We have a great team, and we are frankly speaking to a couple of mammoths right now. So we just didn't have the ability to do that before, and we lost a lot of deals because we just didn't have enough time in the day to close all these deals. But this is the champagne problem, right? To have the fact that our problem is that we have too many leads, and I think that's a great problem to have.
Speaking of good problems to have, perhaps let's talk about WhiteFiber and the strategic benefit of spinning it out. Like, when should we expect that, and what's the rationale?
Okay, well, we haven't made that decision right now, but the rationale is very simple. Of HPC, in the data center area, the multiples are exponentially higher than the multiples given to crypto companies or Bitcoin mining companies, exponentially higher. And so if we didn't have the digital assets portion of the business, the valuation would be much higher than it is today, we believe. We're not getting the multiples that pure play data centers and HPC companies normally get because people know us as a Bitcoin miner. And frankly, right now we're a very small Bitcoin miner because we've been pouring our resources and energy in our HPC business. So you have these algos in the markets just basically pinging us around as a rinky-dink Bitcoin mining company on NASDAQ. They're not really seeing the rest of the entire business because that's probably too complicated for the algos to compute. That there's entire part of Bit Digital that is not being accounted for because it doesn't cleanly input in these algos. So we feel strongly that if we're to separate the businesses, then the capital markets would be forced to properly value our HPC business. So it's good for existing shareholders of Bit Digital, of course, because in theory, they'll open up their brokerage statement the next day if ever we were to spin out, and they'll see Bit Digital say X shares, and suddenly on their brokerage statement they'll see say, for example, WhiteFiber, and they'll have shares there too. And it'll all be done pro rata. So we think that, that is a good thing for shareholders. And I'm one of the shareholders, and I want the shares to do very well. And we'd like to do things in a fiduciary way. Like I said earlier, I'm a shareholder maximalist, and the moves that we're making is to make sure that the shares can be valued as much as possible for all shareholders, including myself, selfishly speaking.
So you mentioned the Bitcoin mining business, obviously, in some ways, taking a backseat to HPC and AI recently. I mean, at the end of Q3, Digital had 2.43 exahashes online. Now it has, I think, 1.6 according to the last January update. If WhiteFiber does spin out, what does that mean for the future of Digital's Bitcoin mining line? Does this maybe end with an exit or a selling to another company? Will it just split off entirely and you'll just appoint someone to run that? Like, what does it look like if these two businesses separate for Bitcoin mining?
Well, look, our Bitcoin mining numbers are down as we deal with the departure from one of our operating partner sites, and we're redeploying miners to new hosting sites. So, and there's also a retirement of older generation machines. So we are still targeting a return to 3.0 exahash in the next several months. We expect a material improvement in our overall fleet efficiency as we replace certain S19s with S21s. But we are realistic. We are realistic about our mining business. We will never be the biggest Bitcoin miner, nor are we trying to be. We don't have the desire to compete on that level. And frankly, we prefer to spend our CapEx on HPC, where we think we can create more shareholder value. We like to think of our mining business as a call option on higher Bitcoin prices, and we like having that optionality. I personally don't like waking up in a cold sweat in the middle of the night because Bitcoin dropped to a certain level, and now we're mining at a loss or not as much as before. Predictable HPC revenue streams allows us to sleep very well at night. So that's how I look at it. And in terms of if we were to spin out WhiteFiber, we will have a digital assets RemainCo, Bit Digital Assets portion. And if we're to do this, we think very creatively on how to stand out in the capital markets. I do not see us being a pure play Bitcoin miner if we're to do that. We will do something very special that no one else is doing, because I truly believe, and I know I'm right, that when it comes to capital markets proxies, the market is very crowded when it comes to Bitcoin. You have MicroStrategy, you have a ton of Bitcoin miners, you have Bitcoin ETFs. It's a lot. And so you got to do something really different. And if we're to separate the companies, it'll be much easier to show the capital markets what we're doing differently on the digital asset side. That's not a me too, if that makes sense.
Yeah, absolutely. All right, Sam, just a few more questions. I know we're running up on time. The big looming question, and we kind of tackled this last time too, but I want to revisit it because the HPC and AI race for Bitcoin miners has heated up. We've seen Bit Digital take a much different approach than a Core Scientific, which has also kind of inspired some introspection from Riot and Bitfarms saying that they're going to evaluate their sites for maybe a sale to a hyperscaler or a retrofitting for AI HPC. We've seen Lancium and Crusoe come out with their Stargate deal with OpenAI and Oracle. What is the benefit of the Bit Digital model and the disadvantages, and vice versa for some of those other ones versus these pure infrastructure plays?
Yeah, I mean, look, we're in both businesses. We have a cloud business and a data center colocation business. We're building a technology stack where the synergy between both lines of the business is going to be really unlocked. We launched our HPC business with a GPU contract, and we've since expanded in the colocation business as well. With the acquisition of Enovum, we purchased our first tier 3 data center, and since then we've purchased our second tier 3 data center really quickly. We have a cash flowing cloud business and a cash flowing data center business. I don't know if others can say that in the sector. We are currently more comparable to CoreWeave as it relates to their deal with Core Scientific. CoreWeave owns and operates their own sites as well, but it is co-locating its GPUs at Core Scientific's facility. And if you look at the success, that Core Scientific has had with the CoreWeave deal, it's no surprise that other miners are also trying to follow suit. But it's not easy. Core Scientific didn't just get lucky. They quietly planned their HPC business for a while, and they hired the right talent to get them in a position for that sort of deal. Human capital is one of the key differentiators in HPC. And that's why we're super excited with the team that we've assembled. We're extremely well positioned for hockey stick growth trajectories. And I'll leave it at that.
Appreciate that. All right, 2 final questions, be quick. With Bit Digital's focus on Innovum and expanding those data centers, can we expect to see more strategic build outs in Canada and the US versus the Iceland site? Like,
oh yeah, absolutely. Our proprietary pipeline of over 300 megawatts is all Canada and the United States. Absolutely.
Yeah, that would make sense.
Yeah.
And then last question, I just want to get your general thoughts on Project Stargate and also DeepSeek. Sure. I know those are 2 completely different things, but they kind of hit the news cycle at the same time. Good. And I wrote a piece for the Mining Pod, for our Blockspace newsletter, about how markets freaked out over DeepSeek for seemingly no reason because they were completely ignorant about what was actually going on. But just curious about your thoughts about both of those news items and what they signal for the industry at large.
Look, I haven't seen any notable change from either Stargate or DeepSync. It's been business as usual. And excitement from our customer base has remained consistently high. The anticipation really has been building for the NVIDIA Blackwell series for months and months, and that is starting to unfold. That's real. On the colocation side, appetite for direct-to-chip liquid cooling infrastructure, and when that is available for customers, is at a sky high. That's real. That's going to be a big catalyst. The innovation in open source is always good for the industry, and ultimately that always leads to efficiencies for more adoption. It enables it enables a more open architecture where there are more users, so that creates a better ecosystem as a whole. More companies are now, when you have an open system, more companies are now emboldened to pursue AI applications because they're now less economically prohibitive to build. So that broadens our customer base. And so that's a win for a company like ours. I don't think people realize that. It's really weird that so many stocks like ours took a hit from the DeepSeek news. And we still haven't recovered from that, when in reality, it's been a big net win from a business perspective. Look, if you look at the hyperscalers' CapEx plans, they've increased in aggregate post DeepSeek, and OpenAI is now trying to raise $250 million. They're trying to raise on $250 million valuation. So, look, this is not a passing fad; it's a movement that will redefine the future, and we're still really in the early innings of the AI revolution.
Appreciate those thoughts. Sam, thank you for joining as always, man. Really appreciate it. Hope to have you back on again, maybe a couple quarters time for an update.
Yeah, looking forward to that. There's going to be a lot of stuff to talk about by then, so I'd like that.
Awesome. All right. Thanks, everyone. You'll have a good week, and we'll see you next time.